we start with the mainline deal, obviously moving millions of barrels of oil a day, something that is very crucial, really, to the movement of energy supply. And this seemed to be an issue you wanted to resolve because of capacity concerns to have more consistency. Can you walk us through this development?
Sure, and thanks for having me, John. Great to see you and Alix. Yeah, absolutely. This is a deal that had been in the works for a number of years, and frankly, we're making our customers more competitive by having a lower toll. We believe that'll move more volume down to the markets they want to get to, particularly down near the Gulf Coast and exiting out of Canada. So it's a big deal. It's a win-win for our customers. It's a win for consumers who are looking for cheap access, obviously, to energy all the time, and it's a win for the shareholders of Enbridge as well. So it creates some more consistency, more competitiveness, and really gives us nice risk-adjusted returns.
You're basically the largest pipeline company in North America. You have a front row seat to what's happening in North America. Oil has had an insane week. Natural gas prices cannot seem to get a bid. Do you see recessionary signs from where you sit, or do you think this is a pure kind of supply problem right now?
Well, I think it's a bit of both. Look, I think it's pretty clear. Nobody can quite figure out what's going on in the economy, right? I mean, it seems like some softening, and you saw some adjustments in employment numbers today, et cetera. It seems like inflation's coming down. But you've got against that, you still got the Russian situation, so a lot of crude that's not on the market, and that's creating that volatility. The great thing is, both in the United States and Canada, there is great access now to supplies of gas and of oil. And I think you're seeing that in a bit of a sweet spot here that allows for consumers to benefit, but still our producing customers to actually make a good buck off the price of those products. So we're going to continue to deliver those products, and they're shipping those offshore, both on the Gulf Coast, on the liquid side, and soon to be much more on the LNG side. And that's exactly where Enbridge gets to play, both on the liquid side and the gas side and storage. We bought a couple of new storage assets driven exactly around that. So you're right, lots of volatility, but net, I think good for consumers, good for producers, and we enjoy being that deliverer of choice for them.
Greg, just speaking of access, some of our global audience may know the Canadian government acquired Trans Mountain and has overseen the expansion, and you've faced a lot of questions about the competitive realities of that. What would you say about how it's going to impact your business?
Well, actually, it's interesting. I think the impact on that is overstated. I mean, first and foremost, that line was supposed to be in service a number of years ago. It's still not in service. Secondly, we've just created a new, more competitive toll. They see their tolls going up because their costs are going up. And so I really don't see that as a huge threat to us. Look, we're going to continue to see our business use our lines 95 to 100% of the time. We just finished two record months here, 3 record months in the first quarter of utilization of our pipes. So yeah, there's a lot of discussion on that, but I think with the toll settlement today, that more competitive toll, our customers really being incented to use our system and us being incented to give them service, I think we're in a good spot, so not particularly worried about that.
Greg, you talked about sort of the sweet spot of oil and natural gas and all of that. However, there's a big push to green. You got the IRA money, a lot of that flowing in. How do you keep your business going and still capitalize on the billions of dollars that are now flowing out of DC for green things?
Yeah, interestingly enough, I think this whole energy trilemma of security of supply and obviously the environmental side of it and consumer side of it has really actually shown the benefits that we need all of this, right? So, and Enbridge is right in that spot. Yes, we're the largest shipper of oil. Yes, we're the largest mover of gas in North America, but we're also one of the largest players in renewables. So renewable wind, we've been in for the better part of 2 decades. We are now one of the top developers of solar power in the United States. And many people don't realize this, but we're actually in 5 G7 countries. So beyond Canada, the United States, France, and Germany, and the UK on the wind side. In fact, we just were awarded 1 gigawatt wind project that'll basically serve Normandy, or think of about 1.5 million people. So we're continuing to do that. And new opportunities are coming all the time. We're using solar power now to operate compressor stations and pump stations applications along gas and liquids lines. Hydrogen, we're one of the first companies to actually start blending hydrogen into gas streams. Renewable natural gas. We just made an investment in a company called Divert. So that's taking food waste, blending it in with natural gas. Cleaner, better, cheaper. And those opportunities are coming about. And then just early in March, we actually announced a joint venture with Yara, large agri business, that to produce blue ammonia off the Gulf Coast. That'll allow us to do carbon capture and sequestration. It'll allow us to do ammonia done on a much more sustainable basis and ship that offshore. So really, I think we're starting to see the interconnect, and we're seeing all parts of our businesses grow now, both from conventional business as well as the unconventional business. So, look, not much gets done without energy. And as we like to say at Enbridge, tomorrow's on, and we're already thinking, working, and investing in those sectors.